It is May 12th, and I got a surprise interview for you all at noon Pacific. Arguably the largest name to date that I have interviewed. We will see if it happens. I have been known to have some big name interviews lined up that get rescheduled last minute, so I'll save that name. Assuming it happens at noon. Oh, I don't know. I'd assume it would be posted by 3 o'clock, so look for that. Again, I don't hold my content back. When an interview happens, it goes up the same day. And then we have our guest, our expert guest, Matt Seamus, lined up for 3 o'clock today. So worst case, we know we will be interviewing, good morning, Matt at 3. We will see if our noon holds. Got a confirmation last night. Had to sign I don't know, an NDA or something this morning. So we'll see. We'll see if it happens. But as far as the financial news of the day, lots of stuff going on. We'll just go through it, no particular order. Lots of things. So first and foremost, I found it interesting that online trading accounts, stock accounts, whether you're at Charles Schwab, E-Trade, or even Robinhood, are up spectacularly. Just at the big three, it's up over 200% April to April, right? So comparing April to April. And, while there's no kind of data about, account balances in there, I think it's safe to assume we are inviting a whole new class of stock traders to the online world of trading, NASDAQ, S&P, all of that. And then you have Robinhood, who clearly skews to younger investors. 3 million new accounts, just incredible growth. And as I kind of read these numbers, we look at the stock market. I've been very clear and very wrong, as many of you like to point out here recently about stock prices. I just go back to while I was in college, or maybe just after I graduated, probably just after I graduated college. I had a couple of jobs, right? I worked during the day. I went home at 8, and then I worked in the evening somewhere else. I remember when Google came public. And I just remember I was selling washers and dryers for my second job. And, whether or not it was Google, which obviously clearly worked out, now called Alphabet, but we were talking about pets.com. And I can't even remember all the other names. Webvan was a big one back in the day. And there was just a rush to open up at that time Charles Schwab accounts, because I think we were trading, each trade was like $29 or $19. Now it's free. It just felt like there was a gold rush, and I didn't want to miss the gold rush. And again, lots of you have clearly pointed out I have been wrong recently, totally okay. I just see the same gold rush today. I see lots of new investors coming in, which is awesome. If they truly have a long-term vision, meaning a decade or more, I think this is an awesome environment for them. If these new investors are coming in and they're buying with a 10-year horizon and they're willing to hold through ups and downs, I think they're right. I think this is the perfect time. But when I go back to my investment journey, my biases, I remember how good it felt to tell my friends I bought X, Y, and Z. And then sometime in the future, it went poof. It was gone. And then I've been jaded, kind of ever since. So I don't know. I just, if you have a 10-year horizon, betting on America is awesome. Historically speaking, younger investors, when the time is good, when it's running hot, it's, why wouldn't you take that, Lewis? Yeah, I would. But it's just, I'm cautious, right? If you're a new investor and you're one of these millions of new accounts, just ask yourself, can you hold for 10 years? Is that your time horizon? If so, go nuts. I don't know enough, Clint, to answer that question. Reach out to me via email and maybe I can get a little more details. But in the end, be careful. Be careful in the stock market. It is set up on a very skinny stool. 5 stocks make up 40% of the NASDAQ. 5 stocks make up 20% of the S&P. That's not normal. So next up, we got Disney. Disney's out there raising more money. This seems to be what people are doing today. They're raising debt. Disney raised another 11 billion in debt. People are loading up their balance sheets with debt. They're also raising cash. They're trying to survive this thing, no doubt. But I go back to what we talked about 2 or 3 weeks ago. Look at Japan. Japan arguably has had 2 lost decades now. But when you really peel it back, it's kind of a balance sheet recession because you have all this debt. Even if it's cheap, you got to pay it off. It just feels bad. And just to put it in context, it looks like we're heading up to about $2 trillion in capital raises when you put it all together. That's a lot of new debt on the backs of companies that many of them were already struggling. It just feels bad. It just feels bad. Then you have the CEO of Boeing. I don't know if you saw this one today. CEO of Boeing, right? What does Boeing sell? Airplanes. What did Boeing CEO came out today? And he came out and basically said, one of my major customers is going out of business. That he's going to have a lot of phone calls from his clients today. A lot of his clients have discretionary dollars, and you know what? They may just decide to go to Airbus. Customers don't want to hear from their vendor that they're going out of business. That's not what you do. Even if you believe that, even if you're right, that's probably not something you say. Especially when you have a competitor like Airbus who's just as happy to take the plane sales or plane leases or plane maintenance, or those are dollars that are discretionary. Boeing, you are in deep doo-doo from the 737 MAX. Now all these airline passenger miles going off a cliff. You probably don't want to piss off your customers. So that's not good. Next up, we got airline miles are predicted to be less than 25% of last year by September. And there's hope that they're 50% by the end of the year. I think those are rosy glasses right there. I think business travel has changed forever. And I am somebody who flew 1 million miles for work. I think it's changed forever. I don't think there would be many people flying 1 million miles for work anymore. I did 1 million miles in about 19 years. A couple of those, like 4 years in a row, over 100,000, 1 year over 200,000. So you can clearly see there was a spike. I don't think there's going to be 1 million mile flyers anymore. At least not until you're in your 60s. It's just business travel has changed. And then you have consumers. I think we have cabin fever, and that's the topic we're going to have today. But I don't think there's going to be cabin fever to go jump on an airplane. I think a lot of people for the first 6 to 9 months are going to drive, right? So if you're within 2 or 3 hours of a vacation hotspot, I think that's what people are going to do. I think there's going to be a lot of driving vacations here shortly because cabin fever is real. I don't know what we're in, 10 weeks of this nonsense. So it is interesting. Next up, we have Simon Properties. Simon Properties is the biggest mall owner in the country. They plan to have 50% of their malls open in the next 7 days. Their income dropped 20%, which I think is really interesting, right? Think about this, right? Simon Properties income is basically rent. And they shut down in mid-March. That's a good point, Josh. I think RV sales will go up. I think you're right. I think that's a wise investment. I think that's a wise investment or opinion. I think you're right. I think RV sales are going to go up. Absolutely. Oh God, Lewis, till June, Jesus. Well, actually, June 1st isn't as much as May 31st. I'm on May 31st here in California. So again, what I found interesting about Simon Properties is they had 20% drop in income, but they had rent due January, February, and March. So they didn't close until middle of March. So how could they have an income drop of 20% when there's really only 2 bad weeks? That doesn't add up to me. Now, it would have been different if they included April month because maybe they didn't pay any rent in April, and that's how you get the 20% drop. But that's not they're on a calendar, right? So it was January, February, March. So I don't really understand how they had a 20% drop when most of their rent should have been collected by the 15th. I don't get it. Yeah, kitchen sink, I'm telling you, just watch for it. Fed buying corporate bonds today. This is a game changer. This has been long discussed. I don't know, rumor is the right word, but it's been in the news for a while. It starts today. And then I find it interesting that the Fed is going to focus on fallen angels. Fallen angels are essentially companies that were once considered investment grade, that because of this health scare have been downgraded to junk. I kind of get the logic, but there's kind of a reason they're down at the junk level, right? So I'm not sure that's where I would be sticking my toe in the water, but you almost have to. Because if you don't help them, there could be whole swaths of businesses that just can't function going forward. So pretty interesting. Do you see what's going on with Tesla? Elon Musk basically flipped his middle finger to the governor of California. The governor of California ducked, said he didn't know what was going on. And now I guess it's the county, I don't know if it's a county or city, is basically getting in the middle of this. And Elon basically said, come arrest me. Come arrest me. And then the president comes out today and says, leave the guy alone, let him open. It's becoming nasty. And yeah, like I said the other day, I think Tesla should leave. I think there will be more and more companies leaving California. I think there'll be more and more citizens leaving California because our taxes are about to go freaking through the roof, right? $54 billion revenue shortfall. Ugh, just nuts. And yeah, good for Mr. Musk giving the middle finger to the governor. Hertz has just got to go. They can't. Hertz rent-a-car's got to go. Their debt structure is all wrong. They've gotten delays here and there. They're going to join the ranks of Neiman Marcus and God, I'm drawing a blank on the other brands that have already gone out, but they're going to go bankrupt. They need to restructure debt. I don't think they disappear. In fact, I don't think a lot of companies disappear. I think they just reposition their debt. Again, core CPI, we had deflation in April. So you've been watching this channel for weeks. You're going to see I was right again on this one. So again, you got the CPI down 0.4% in a month. That's the record. There's record since 1957. So we are, that's the biggest drop ever. Really came from apparel and transportation, right? Oil makes sense. It's funny though that grocery stores, we got to watch this. Grocery stores, stuff that you and I consume, are actually up most in 46 years. Meat and eggs were the ones called out. So again, we have a very unbalanced CPI number, right? There's the stuff we consume, and then there's the stuff that's kind of nice to have. We're gonna have a lot of tug and pull, and I think we're gonna have deflation certainly the next 3 to 5 months. But next year, it's going to be a different story with inflation. The cost of running businesses are going to go up. Inflation is coming, folks. I don't know how else to say it. Be ready for it. If you have a chance to get cheap debt this year, you should be doing that because only fixed rate debt. Because next year, interest rates are going up. They can't stay at this level. It's going to be bad. Another one that drives me kind of crazy. What would I tell you if a company's earnings were cut, earnings cut, they've lowered the growth rate for the company, but they raised the stock price? That's the stuff that's going on, and this is why I don't understand the stock market, right? Traditionally speaking, if you cut revenue, you cut growth rate, that would not lead to a stock price increase. Well, if you're Alphabet or Google, that's exactly what happened. Analysts took their price target from 1,400 to 1,600 and cut revenue and cut growth rates. Yay! Come on. This is not a normal market. Something just for fun. Sometimes I read things and I chuckle. Pajamas. Pajamas are up 143% year on year. Guess we like being comfortable. Where pants are down 13%. 13%. Yes, fixed rate, fully amortized, long-term, non-recourse debt. Get all you can this year, in my opinion. Got some data from WeWork. This data kind of surprised me. First off, they paid, again, this is their numbers, so you can argue if you believe them or not. WeWork paid 80% of their rent obligations, so 4 out of 5, and they've collected 70% of their rent. You got to be careful with that 70% rent number because I'm sure they weren't fully occupied, so their economic occupancy was probably in the 50s. They're losing money. There's just no question they are losing money. They're also bigger than I thought. 739 locations in 140 cities, and they have 662,000 memberships. Yeah, the WeWork's going bankrupt. It's no question. Oh, yes. I mean, the only question is what month do they file? Jeez. I said this earlier, but this is going to be a problem given I live in California, so it's going to be front and center. California's budget shortfall is forecast to be $54 billion. You're right, I should. Thank you, Josh. I think that's a good idea. We're going to cut services and taxes like never before, and raise taxes like never before in this state. It is very much the socialist state that us in New York, it seems to be. Give everything away for free and just raise taxes later. Not good. I think we could actually lose Prop 13, which is a California staple for property taxes that is just going to force more and more people to leave the state. Not good. Just on the good side, lots of folks are asking me about tech names and software companies because that's where my background is. I love what Datadog and ServiceNow are doing. Those businesses do well in a work from home kind of scenario. They supply the right kinds of things. Those are the kind of companies that I could get behind if I was in the software space still. I think they do well in this environment versus some of the larger enterprise kind of players who are stuck selling kind of enterprise software. What would it take for me to leave California? Oh, Olivia's acceptance of leaving California. If I had my druthers, I'd be gone already. But I'm not leaving without her. A barrel now. It really needs to get to 32 for many companies to kind of be able to limp along and break even. We're getting there. I think as states and cities open up and, countries like Saudi stick to their additional 1 million barrel cut, I think we're going to get there. I think we've seen the low in oil. I think the suppliers have finally realized that $10 oil helps no one. So I think that is coming back. And then one thing I'm going to probably do a separate video on today is the real estate environment. I'm starting to collect some numbers. I'm actually going to do a video today on Las Vegas. I found some data on Vegas that I'm going to talk about. But the real question is, when your state or city opens up, what happens first? Do buyers come back en masse? Do sellers come back en masse? What happens? It's going to be lumpy. It's going to be unbiased. We don't actually pay a lot of taxes because we hide everything with depreciation. So that's not going to work. I don't think I've paid California state income tax in several years. And Olivia hasn't probably in a decade. So that's the tax argument's not going to help. But if property taxes change, if Prop 13 goes away, that could hurt. That could be a reason, right? We own a lot of California real estate, so that could be a thing. So that's what I got for you today. Again, I'm going to do I have a surprise interview at noon. Cross our fingers. Let's hope that sticks together. Then we'll be interviewing Matt Seamus at 3, and I'm going to do a talk on Las Vegas here momentarily. All right, everybody, take care of yourself. Have a great day.